Realized vol has been pretty stable. Bitcoin's at 35, ETH's around 70. Front end implied BTC drifting by about 3 points, ETH down by about 1.5. But it did spike by about 5 vols on the rally when we popped above 3,900 and we were threatening to go through 4,000, but that didn't actually materialize, so we've drifted back down. Carry does remain negative in both assets by about 3 to 5 vols. So we've got implies going lower and kind of going below realized. But looking at the kind of OHLC charts here, you can see that we haven't really been bursting through the implied ranges for the last few days. So we may well see realized settle down as we kind of take out some of those bigger moves from a week ago, and then you'll get that stair step lower in the orange line, which is realized, and we'll go back to a slightly more positive carry once again. So remember, implied vol always leads realized vol, and right now implied vol is going down, which is anticipating a stability coming back to the market. All right. What else are we looking at? Look at the term structures here. We got a steep contango. I mean, it's crazy to see like super short dated Bitcoin vol at 25. Like, what the hell are we trading? It feels like we're trading an equity, not a crypto anymore. But you look at Ethereum, that's obviously much higher in the 60s. Again, back end vol catching a bit of a bid in Bitcoin. We saw some call spread buyers, decent chunk of call spread buying in December, providing a bit of a bid for Vega there. Also a bit of a bid for ETH Vega, but you can see the front end, it's all pretty unchanged on the ETH curve where that front end Bitcoin was offered. Here you can see the kind of path and the time series. So very steep curves, which is the space of these lines. You can see a very steep curve in Bitcoin. Did get a little pop back to a flat curve there in the front last week on that kind of sell-off, but it didn't last very long. That front end really getting hit very quickly. Ethereum, though, as you can see, is all clustered here, which means we've got a completely flat term structure there. In terms of skew, we got down to about -4, which is 4 vols put premium, both in the 1 week and the 1 month expiry. Since then, we've had 1 week go back to calls, but the 1 month has persisted in puts. And Ethereum got down to like -3, -3.5, but has flattened off again there. Everything back in call premium. So from the term structure of skew, you can see this dip in the skew curve, right? And that's where we were in a call premium across the curve, but now in the kind of August expiries, we've moved back to a put premium. That's actually been driven by some quite large chunky flows, like about 5 or 6,000 puts being bought on the 8th of August expiry, quite a large notional clip of about $600 million. That really distorting the skew curve and bringing a bit of a bid back to skew in Bitcoin. It has also created a bit of a dip in Ethereum as well here. But we are still in call premium across the curve, even though we have got a little dip in structure there. Okay. So some caution coming back. Some people thinking they need some hedges in place for the early part of August. But in general, longer term thesis still intact. People still buying call spreads out to December. So no reason to be overly alarmed. And then closing out with relative value, you can see here the relative spread in the front ends back to about 35. Ethereum vols over. The ETH Bitcoin cross rate has managed to hold its gains after breaking higher. So that's still looking strong. It hasn't given back those crazy gains that we saw. And realized vol still justifying the 35 vol differential there. Back end vol, on the other hand, starting to drift, obviously with a bit of a bid coming back to Bitcoin vol. ETH not catching as much of a bid. So you're seeing that spread in deck moving back down to 20, but pretty small moves. We're talking about 1 or 2 vols here or there. Nothing to really write home about. The relative value skew curve clearly still got a bullish bias towards ETH. As you can see, this is all well above zero, which is saying ETH is skewed more bullishly in terms of skew than Bitcoin. And then my ETH Bitcoin Vega spread in Deck 25, obviously getting some money back through the stability of the market and through that Vega spread compressing, but nothing to write home about. That trade did lose a little bit on the explosive Ethereum move. I'm kind of running it relatively delta neutral here. I did put some futures hedges in place as we started moving. But I think the way I'm going to manage it is like if we break above 4,000 in ETH, then I'm just going to cut the trade because I'll have very little confidence that ETH vol is going to come down when we're flying through 4,000. If we do go through a couple of weeks of stability or weakness, then that spread might actually continue to give me some money back. But like I say, yeah, I'd probably take the 4,000 break as a cue to get the hell out of the way. All right, guys, that is it for crypto this week. I'll catch you guys same time, same place next week. Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.